Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing a problem in depth about how to solve depreciation using the straight line method. Let's figure out with the illustration that we'll be mentioning down in the next sheet. So, when we talk about depreciation, we already know it's a reduction in the value of asset. We have already learned about the objectives and the factors that influence the depreciation amount. And when we talk about the SLM method, we have already known what SLM method basically means with the formulas also in it. Now, what we'll be doing is that we'll be giving you certain examples, or rather one illustration which will have a comprehensive detail of how SLM method is supposed to be used and how this specific debt, or rather when we talk about depreciation, is supposed to be used in this specific illustration. I'll jot down those details and then we'll solve all those details, including the functionality of preparation of depreciation accounting in journals and specific accountancy format. Let's do it. Now, if you can see, we have mentioned down an illustration here. Messrs. ABC, or rather Messrs. ABL Corporations, has purchased a machinery on 1st of April 2018 for 20 lakhs. Now the cost of the asset has been mentioned as 20 lakhs. They have also mentioned that additional 2 lakh rupees was already included in this cost, which was for installation expenses. That means 20 lakhs already include 2 lakh rupees of it. So the actual purchase price of that asset would have been 18 lakhs plus 2 lakhs of this additional amount, which brings the total cost of that asset to 20 lakh rupees. Now, this additional machinery that was purchased on 1st of October 2018 for rupees 10 lakhs. What we have to figure out is that depreciation for an estimated useful life of 5 years. So both these assets have an estimated useful life of 5 years here. Rather, we can also figure out what is the rate of depreciation. But before that, let us understand that the cost is given, the estimated useful life is given, and the scrap value has been mentioned, that is 10% of the actual cost of the asset. So for example, if you have 20 lakhs as a cost of the asset, the scrap value after the estimated useful life will be 10% of 20 lakhs. Now what we'll have to figure out is that in this question they have mentioned that we need to figure out what is the value of the asset after 2 years. This is one of the major important questions that they have mentioned here. This is a comprehensive question, so you'll have all the workings and all the details mentioned into one specific illustration, which will give you a brief idea about how to calculate details of depreciations, including one specific sum itself. So when we talk about these details, let's figure out, but before that we'll have the workings mentioned here, and before that we'll have the timelines mentioned. So let's prepare the timeline first, and then we'll go ahead with the working and then the final value calculation. Let's figure out the first part of this illustration, that is the timeline. So if you can see, we have prepared the timeline here. 1st of April 2018, cost of the asset 20 lakh rupees. First asset which was procured, we'll tag it as first. 1st of October 2018, another asset was purchased, the cost of it being 10 lakh rupees. We'll tag it as second. Estimated useful life of both the assets is termed as 5 years. Scrap value will be 10% of the cost. So we'll figure out the scrap value of first asset and scrap value of second asset individually here. So if you can see, we have figured out the scrap value of the first asset, which is 2 lakh rupees, and scrap value of the second asset, which is 1 lakh rupees. So these specific informations will be used further when we go ahead with the working note now. Now what we have to figure out is the depreciation amount and the value of these assets after 2 years. So let's figure out the working first, and then we'll be able to understand, or at the gauge, what is the depreciation amount and what is the value of these assets after 2 years of depreciations into it. Let's figure it out with the working note in the next sheet. We'll go with the working note of first asset. So let's figure out the depreciation amount first. So if you can figure out, we have done with the working of the first asset, which says that the depreciation amount will be 3,60,000 per year. How did we figure out? With this formula. Cost of asset minus scrap value upon estimated life. Cost of asset was 20 lakhs. Scrap value was 10%, which we figured out was 2 lakhs, divided by estimated useful life, which is 5 years. So 20 lakhs minus 2 lakhs divided by 5, which gives you 18 lakh upon 5, which gives you per year there will be a depreciation of 3,60,000. So this is how we have figured out the first working. Now we'll be going on the next asset working here. We'll be using the same formula for our understanding. That means depreciation is equals to cost of asset minus scrap value upon estimated life with different figures as per the requirements of the second asset. Now we have already figured out the depreciation amount for the second asset, which is 1,80,000, using the same formula. Now there is a catch in this question. If you can see, the reason why we mentioned the timeline here is to understand what date that asset has been procured. One of the asset is being used for 12 months, one of the asset is being used only for 6 months. Figure out which one is it. You're correct, that's the second one. The reason why, because this asset has been purchased on 1st of October 2018. Now when you talk about the financial year, it is of 12 months. So from October to March, you have 6 months being utilized here. October, November, December, Jan, Feb, March. 6 months being utilized for your reference. Now, whenever this asset is being used or this asset is taken into consideration to figure out what is the value of this asset after 2 years, you have to make sure that whenever depreciation is being calculated in the first year, it will be calculated from the date of purchase until the end of financial year. For asset number 1, we have the asset being utilized for whole 12 months. But for asset number 2, the total depreciation that has been calculated is for the whole year. However, the utilization is only for 6 months. So for this year, we'll have only 6 months of depreciation. That means half of 1,80,000, which will give you 90,000 of depreciation. So when we figure out that what is the value of that asset after end of 2 years, it will actually include the total of asset minus half year's depreciation, which will be the value of that asset at the end of first year. This is only for asset number 2. But if it has to go for asset number 1, that means the total cost of asset minus the depreciation which we have figured out. Now again in the next year, you have total utilization of that asset for all the 12 months. So 1,80,000 will be constant there. So if you understand, in SLM method, these depreciation amounts will be constant across the estimated useful life. So this is how you figure out. Now we'll be doing the next part of the working, which will have the value of these two assets at the end of 2 years, which will mark the closure of the sum after that. Let's do the second working here. So now that we'll be preparing the second working note of it, which will give you the value of both these assets at the end of 2 years. Let's prepare that and mark the closure of the sum. So if you can see in this working, we have prepared a specific format for your understanding, for your rational understanding. Year 1, year 2. This is how we have segregated, because at the end of second year, we need to figure out what is the value of all these assets. Now, year 1 will have the cost. That means asset 1 cost minus the depreciation amount. That is, the balance that will be left can be called as the book value of that asset at the end of first year. Similarly, in second year, we'll only subtract the depreciation amount out of the previous book value. That means first year's book value, which has been the remainder section. Out of that, we'll subtract the depreciation for the second year, which will give you the book value of that asset at the end of second year. That means that is the answer we are looking out for. What is the value of that asset at the end of second year? Similarly, this will go for asset number 2 as well. But you need to understand, in asset number 2, you have the catch of 6 months. So make sure there is no waiver or there is no diversion when you have to try to solve these answers, or rather these questions, whenever there is a bisection of procurement of any specific asset in the mid of the year. So let's figure it out. So if you can figure out, in this illustration, we have figured out what is the value of the asset at the end of second year. Year 1 cost, that means 20 lakhs minus 3,60,000 gives you a total of 16,40,000 in the first year value of the asset for asset number 1. Out of which, again, you subtract 3,60,000, that will give you 12,80,000 as the value of that asset. Similarly, in the second year, rather in the second asset, you have 10 lakhs, out of which you will subtract only 90,000, because the usage of that asset has been only for 6 months. So depreciation is calculated only on the usage. So 10 lakhs minus 90,000 gives you 9,10,000, and later in the second year, you will subtract 1,80,000 completely out of which will give you a balance of 7,10,000 there. So when you talk about depreciations being taken into consideration, rather depreciations of all these assets will have these values mentioned here. So whatever value you have derived here, which has been highlighted, that will be the value of that asset or those assets rather in the end of second year. So I hope this illustration gave you a lot of clarity about how to solve depreciation using the straight line method and what are the formulas and how the structure is supposed to be done. Timelines, working notes, and journal entries will be a part of it, but make sure you have a habit of solving these questions mentally, because you'll be having multiple choice questions and you have to be very fast with it. So make sure you do a lot of practice of using these formulas just on the calculator, and it will be very easy for you to solve these questions. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.